Financial markets. They sound complicated, right? With all the numbers, charts, and fast-paced trading, it can feel overwhelming at first. Don't worry, we've all been there. It's normal to feel a bit lost when you're just starting out. Think of it like a giant flea market, a place where people come together to buy and sell a variety of items. You have buyers and sellers, each trying to get the best deal. Everyone is looking for that perfect bargain or the right price to sell. The stock market is similar, with people buying and selling pieces of companies called stocks. These stocks represent ownership in a company. Now, imagine going to that flea market without knowing the value of anything. It would be pretty confusing, right? You could end up overpaying or selling something valuable for peanuts. That's why it's crucial to understand what you're dealing with. That's where understanding the market comes in handy. Knowing the trends and the value of stocks can make a huge difference. Just like you wouldn't buy a used car without checking its condition, you shouldn't invest without understanding the market. It's all about making informed decisions. That's where technical analysis comes in. It helps you evaluate stocks, much like a mechanic assesses a car. It's like having a mechanic by your side, helping you assess the engine of a stock. This way, you can make better investment choices. So, are you ready to dive in and become a market pro? Let's go. The world of financial markets is waiting for you. Technical analysis sounds scary? It's not. In fact, it's a fascinating way to understand the market. Imagine trying to predict the weather by looking at clouds. You observe patterns, right? Technical analysts do something similar, but with charts and graphs instead of clouds. They look for patterns in the data. Technical analysis is like being a detective. You gather clues from the market's past behavior. It uses past market data, like price movements and trading volume, to understand the stock's story. This historical data is crucial. It helps you identify trends, spot potential buying or selling opportunities, and make informed trading decisions. Recognizing these trends can be very profitable. Think of it like this. You see a long queue outside a new restaurant. The crowd indicates popularity. You might think, this place must be good. The same logic applies to stocks. Maybe I should try it too. This is how traders think when they see a stock with increasing volume. That's technical analysis in action, using past data, the queue, to make a decision, trying the restaurant. It's all about interpreting signals. So, technical analysis helps you understand the market sentiment and make smarter trading decisions. It's a powerful tool for any trader. Now, you might be thinking, what about a company's actual performance? Doesn't that matter? That's where fundamental analysis comes in. It's like checking the restaurant's menu and reviews before deciding to join the queue. Fundamental analysis looks at a company's financial health, management team, industry trends, and more. It's like getting under the hood of a car to see how well it's built. Technical analysis and fundamental analysis are like two sides of the same coin. Both are important for making well-informed investment decisions. While fundamental analysis tells you about the company, technical analysis helps you understand the market sentiment towards that company. So, use both. It's like having the restaurant's menu and seeing a long queue outside. You're all set to make a great decision. Your roadmap to the market. Charts are the heart of technical analysis. They're like maps that visually represent a stock's price movements over time. Imagine tracking the price of your favorite samosa every day for a month. You could plot it on a graph, right? That's what a stock chart does. There are different types of charts like line charts, bar charts, and candlestick charts. Each tells a story about the stock's journey. For example, a rising line on a chart means the stock price is increasing. Charts help you identify trends, support and resistance levels, and potential price breakouts. They're like signposts on your trading journey, guiding you towards profitable decisions. So, get comfortable with charts. They're your best friend in the market. Indicators, the secret sauce of technical analysis. Indicators are like special tools that help you analyze charts better. They are essential for traders who want to make informed decisions. They provide additional information about the stock's price movements and help you identify potential trading opportunities. By understanding these movements, you can predict future trends more accurately. Think of them as your market assistants, always ready to lend a helping hand. These indicators can simplify complex data and make it more digestible. There are tons of indicators out there, each with its own unique way of analyzing the market. Some focus on price, while others look at volume or momentum. Some popular ones include moving averages, which smooth out price data to help you see the overall trend more clearly. MACD, which shows the relationship between two moving averages, and RSI, which measures the speed and change of price movements. Each indicator tells a different part of the stock story, like its momentum, volatility, or trend strength. By combining them, you get a fuller picture of the market. Don't get overwhelmed by the sheer number of indicators. It can be tempting to use them all, but that can lead to confusion. Start with a few basic ones and gradually learn more as you gain experience. This way, you can build a solid foundation and expand your toolkit over time. Remember, indicators are tools to aid your analysis, not make decisions for you. They should complement your trading strategy, not dictate it. So use indicators wisely, and they'll help you navigate the market like a pro. With practice and patience, you'll become more adept at interpreting these valuable tools. Unlocking the market's hidden messages. Remember looking at clouds and seeing shapes? Chart patterns are similar. They are recurring formations in price charts that can indicate future price movements. These patterns are like secret messages from the market, hinting at what might happen next. Some common patterns include head and shoulders, double tops and bottoms, and triangles. Each pattern has a unique meaning and can help you anticipate potential trend reversals or continuations. Learning to identify chart patterns is like learning a new language. It takes time and practice, but once you master it, you'll be able to read the market's mind. So keep an eye out for those patterns and let them guide your trading decisions. Your journey begins now. So there you have it. Technical analysis might seem complex at first, but remember, it's like learning any new skill. Start with the basics, practice consistently, and don't be afraid to ask for help along the way. Remember, the market is like a roller coaster, with its ups and downs, but with technical analysis as your guide, you'll be well equipped to navigate those twists and turns, making smarter investment decisions. So, start your technical analysis journey today, and who knows, you might become the next market guru.